Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're going to be jumping down into the world of Bitcoin, taking a look at what's been going on most recently and what we think is likely to happen next. As I get into the video, if you find it useful and informative, smash that like button. I really do appreciate that. If you are new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so you will be able to be kept up to date with everything that we do here at Cheeky Crypto. And if you haven't yet joined us in Discord, guys, check it out, linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free and I don't think you'll be disappointed by what you find down there, so why not go ahead and check it out. Let's jump right down into this one though. So we are talking Bitcoin paired up with USDT on the 1 hour chart, and Binance is the data source. We are essentially talking about the microstructures, what's forming out on this 1 hour chart, as that will build into the bigger macro piece. There's some interesting things over the last 4 or 5 hours or so. We've seen a push to the upside. This has actually changed our structure a little bit on our smart money concepts, and so we're going to dive into that and see what's going on. We'll take a look at the Elliott theory and what this might mean for our structures here as well. But for now, let's just start with the smart money concepts. So it's a little bit cluttered on the chart here, and there's a lot of things to kind of talk about. But the main thing to kind of just keep an eye on right now is that right there. That there is a change of characterization between or from the bearish state of play that was happening all the way up here. Okay, so we had this change of character back in 17th of April. Okay, we had all these break of structures confirming that bearish state of play, and then recently, and about this candle right here, when this one closed at 4 a.m. this morning, and that's UK time, BST, we can see a change of character going from bearish now to bullish. Okay, this is not yet confirmed. Okay, so when you see a change of character, sometimes they are false flags. They happen and then, you know, become dropped down really hard, and then it changes it back to a bearish state of play, or vice versa. So just be aware in mind that we've got step 1. Step 2 is to get a break of structure, a BOS. So we've got to come up higher than what is now a weak high. This was previously a strong high. This area here was a strong high. Now we've got a weak high, so we broke up above it ever so slightly. One of the things that we should be very aware of, though, is that unless we push up higher than 27,663, we are still inside our sell order blocks right in here. Okay, so there's still a little bit of concern here, but hopefully, yeah, if all goes well, then we'll get that break to the upside. Now we can see here that there was a fair value gap that was created as an institutional candle came in, and we're pulling back down. This is basically because an imbalance of the order books creates this imbalance with too much buying pressure and not enough selling, so the price jumps up. Usually institutional players will stop buying when they see these things because there's not enough liquidity to support their buying habits. So essentially they just let the price cool off, and it naturally wants to come back down and fill the gap out. Once filled, liquidity returns to that space, and sometimes you'll see then another surge to the upside. We're above the 200 EMA now and above the equilibrium, and we now have a strong low down here as we broke higher. Okay, so we can see that this was a 1 wick situation, and if we were to break down and we get a bearish change of character, this will probably become a weak low again. But for now, it's a strong low, unlikely to get broken at this point in time. So from our smart money concepts, we can see some interesting things developing. And now from a Elliott wave theory point of view, I'm going to just draw this on here briefly. We can see that we'd have a wave A, a wave B, and a wave C. Okay, and if we just measure the distances on these here, we can see that we've just tapped into the 1-to-1, with the 1.236 being ever so slightly higher than 27,663. So it's possible that we still come up a little bit higher on the 1-to-1 ratio, but for the most part, or the 1 to 1.236 ratio, but for the most part, we've kind of completed this. There's no need from an Elliott wave theory point of view to think of that move needing to go up any higher. So let's actually jump on down into the Elliott wave theory side of things, because in here we are tracking a ending diagonal, in my opinion, and we potentially have still got a very long way to go. So as you can kind of see, we're expecting this move to the downside to kind of come down into this range down here, but it looks like our B wave had to go up a little bit higher. At the moment, we have not pierced higher than this potential wave 2, which is a irregular flat correction right in here. We kind of have a double top situation with that. Let me show you right here. Okay, so this particular candle is 27,500, and yesterday's candle is 27,495. Okay, so you can see that that is still just fractionally and marginally lower than our wave 2, and that's allowed. But what's not allowed is a move up higher than this wave 2 under a wave 3 situation. Okay, so wave 3 is not allowed to pierce higher than that origin of wave 2. Alternatively, we're still in a wave 2 situation here and we just can't see it. It might just be that this is a giant A, B, and C structure for our wave 1, and our wave 1 is actually all the way down here. All of that's in a wave 2. And if that's the case, then we cannot go higher than this area here, 27,663.59, because our wave 2 is not allowed to cross that origin point. So there's a few things there to kind of bear in mind. I'll try and draw this out just over here, just so you guys can understand what I'm talking about. So under a diagonal-based structure, wave 4 and wave 1 are allowed to overlap, but wave 2 is never allowed to go higher than the 0 position here, okay? And wave 4 is never allowed to go up higher than the ending position of our wave 2. Okay, so there's a limited amount of things that we're kind of looking for here. So if we want to be bullish on the market and we want to break out of our Elliott wave structure, either our wave 4 needs to come up higher than this point here. Okay, basically, essentially anything going higher than the 0 position would break our structure. So we'll be looking for that 27,600 and what did I say it was? 663.59. Anything higher than that's going to be great. It'll break the structure, and we can talk about zigzag patterns rather than impulsive patterns. And if we fail to do that, and we stay below this area, then we might see that this is actually our wave 2, and we're going to continue moving down. Okay, there's a few other options that are available in here, but for the most part, it's either wave 1 is actually down here. This is all the wave 2 to the upside, which for the most part has met its 1-to-1 ratio. Or alternatively, we have a new structure starting to emerge here, and will change the pattern and the structure of the market overall for Bitcoin. And it doesn't necessarily mean that we won't go down. It just means that the way that we go down is going to be different than what I have currently mapped out. So if I zoom out of this, just bring this in, at the moment we're trying to track this in ending diagonal structure towards that 24,700 level, or maybe a little bit higher than that. Could be on the higher side of this one at around 25,400. But essentially it would look like this, right? We have a wave 1, wave 2, wave 3, wave 4. And it's possible that that wave 4 is still not done as well. And then we come down into that final 5th wave movement there. And because this is an interesting area altogether, we could start looking at this maybe as nested zigzag patterns rather than impulsive patterns as well. So it doesn't say that we can't go down deeper, and I'm still pretty confident at this stage that we're not likely to go higher than 31K unless we start really seeing the right structure to the upside here. So it still looks like we have room to the downside. It's just questions whether or not we're going to hit some of these additional 1.618 targets on that journey to the downside. So over the last few hours, we've seen a little bit of hopium enter into the space. Essentially, this move to the upside here has kind of fueled the bulls a little bit. It'll be interesting to see whether or not this is going to be a trap situation where we then start to see a big move to the downside, or whether or not this is going to start to help form out a new kind of move upwards and all that kind of good stuff. Now, from our stochastic, we can see that on our hourly chart here, we need to see some progression to the downside. It's the same for the 4 hour. It's just kind of up into the overbought range, so we can see moves to the downside from there. The 8 hour has rapidly moved up, but again, I think we're just going to start slipping down there. The 12 hour still needs to go down. The 16 hour still needs to go down, in my opinion. The 20 hours bounced up a little bit. The daily is almost back up towards the overbought, with the weekly heading down towards oversold, so we've still got more downward pressure there, and the big concerns, the monthly going up more towards the overbought range as well. So there's definitely some interesting things going on with our momentum indicator, but for now it does look like the bulls are trying their best to kind of push this up and break our structure to the downside. And for now, we'll just see how that one plays out. My next expectation still remains that we end up going down a fraction more before we get any form of significant swing to the upside. But again, I'm quite happy to see this thing swing up a little bit earlier if it needs to, but it doesn't really distract from the bigger macro piece, which unfortunately does show us with a need to continue moving down a little bit deeper. I'm going to leave this video right there, just give it a nice brief. If you found it useful and informative, smash the like button. I do appreciate that. If you are new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be able to be kept up to date with everything that we do here at Cheeky Crypto. With all that said, done and out of the way, guys, I hope everyone has a fantastic day, and I'll catch you all in the next one.
We are not financial advisors, and none of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.